Hello traders, it's Samurai Trader here. Welcome to this training session. In this session I'm going to be discussing trading double tops and double bottoms. Double tops and double bottoms can occur with both trading with the trend and counter trend, and can be an extremely profitable strategy to trade. Now, day and swing trading is really a pattern solving exercise. Using trend lines in your trading and recognize and learning how to trade patterns can help catch the really big moves. But what's really important that you realize is that there's a lot of different types of patterns. So what I'm doing is creating a series of recordings that I'll be emailing out to you, discussing various setups such as ascending and descending triangles. We'll be discussing wedges, wolf waves, and a number of other extremely profitable trading strategies. But we'll start with double tops and double bottoms because it's one of the easiest to learn and one of the most profitable. So as we get into this video, I do need to put the risk disclaimer up. If you're new to my channel, or if you've perhaps haven't watched one of my many videos for a long time, I'd recommend you stop the recording and read the risk disclaimer. Now, as we get underway, this video is actually being posted for the benefit of the public, and I may have a number of members actually watching this video as well. So members, if you're watching the video, if you go and log into the members area, you'll actually see that I've created some extremely comprehensive PowerPoints, and I've been there for some time, so you may have already watched these. And let me just find it here for you. Where's the double top and double bottom one gone? Right before me, there it is there. Oh dear me, we got that many PowerPoints now, get a little lost. So if you go in there, traders, you'll be able to download the PowerPoint, and also if you go and log in to the trading strategies videos, the videos are recorded teaching you how to trade the strategy are in the Excel sheets. And one more thing, in the trading ebook section, I have 3 or 4 excellent books there on trading patterns. I'd recommend that you study. Now, with that being said, traders, it's very easy to become overwhelmed, and I recommend that you start with one pattern, learn how to trade it, master it, own it before you move on to the next one, because I'm going to be teaching you over a series of videos 7 or 8 outstanding patterns that will dramatically improve your bottom line. But it's very important that you start with one and build from there. Otherwise, what happens is you really become overwhelmed, and as they say, jack of all trades, master of none. Likewise in learning patterns, spend the time. And I'd recommend you start with double tops and double bottoms, because as you see, it's not an exact science. It's very easy to learn, but gee, they're profitable. Now, very quickly, I don't want to turn this into a big advertisement, but if you haven't already subscribed to my YouTube channel, please do visit my website to request. I've got 2 free ebooks now if you're new to my channel, and of course all of this is contained along with dozens of ebooks. There's now 300 training videos. There's just a ton of material in there for $197. You get all of this. There is no upsell. There's nothing else to buy for a permanent membership to the Day Traders Fast Track program. Now let's get into this. So double tops and double bottoms, I'm not going to read all of this because I want to get to the charts where I can visually explain it to you. But a double top or bottom is a reversal chart pattern, which is defined when price finds resistance or support at a particular level. It retraces, then makes a second attempt to break through, only to fail and fall away, I should say. Now the market loves to test things twice, and what happens is once it tests it twice and it's rejected, quite often you'll get an explosive move back in reverse. So it can be just a great strategy to learn. And I'm not going to go through and read every word as I mentioned here, because we'll look at the charts and I can explain it a lot easier. If you want to, of course, just pause the video. But I do want to show you these charts, and then we'll go to look at some live charts from yesterday, from last night's trading. So it's very simple. We can see here that prices come up and hit resistance. It's tested it once, gone up and tested twice. Now a lot of traders will then say, okay, it's gone up there, to have a sell stop in down at your last swing low. Traders, you give back all of that profit. There's a lot of profit can be given. Now we may call it an aggressive entry, but using one of the Day Traders Fast Track strategy entries, we can get in here very early and very successfully. Now I've got down here high probability once price supports breaks support. Well, that's questionable. I really like to get in up here, and many other traders, many professionals would say exactly the same thing. So very simple. You go up to resistance, up again, we would have an entry up here, or if you do want to be conservative, you can jump in here. Now here I'm showing some examples from some older charts that I actually had on trading the Forex market. It doesn't matter what market you're trading, whether you're a day swing or position trader of stocks, futures, or Forex. The setups are their geometric setups. They set up every day in every market, so they just it's just a really reliable pattern. We can see here once again coming down to support. So the other ones with the double top was resistance. Now we're down to support. So we've come down, tested once, tested twice, and we would actually be in around at this level here. If you wanted to be conservative, you can get in once you take the high out. And if you're trading fractals, by the way, if you've got a small swing high there, yes, that'll be fine. But I really like to get in, because by getting in earlier, if you're like me and you like to put your stop loss 1 or 2 ticks under the little swing low here, the earlier you get in, the smaller your stop loss is and the larger the target you can set. So that's very important that you consider that. And you'll see this regularly where you'll get support and resistance. So here we're looking at the 15 range. Your 15 range chart is quite slow. Now on this particular day, you can see actually it was over what's that, yeah, that's over a number of days, just looking at the chart time down there. But you can see we've come down twice, gone up there and tested it twice and fallen away. And as I mentioned, it's a really regular, reliable strategy to look at and to trade. So let's now go directly to the charts. So I'm going to give you a number of examples here now, trading double tops and double bottoms, and in actual fact virtually any pattern in the market. And when you're using trend lines or trading patterns, it's not an exact science, and in most cases close enough is good enough. And as I say to my members, walks like a duck, looks like a duck, quacks like a duck, it's a duck. So let me just show you this one. Now this is a trade actually that I took last night on gold. So what we're looking at here, traders, is gold, the yellow metal, 144 tick, and you can see here I was right on a pivot level, a floor pivot, and I think this was the S1 actually. But anyway, we can see here it's not exact, I call this a flat top, but it has the same formation as a double top. It's gone up, tested, bummed around, so it's not an exact one, but I wanted to show you that it doesn't have to be. And you can see here, one thing I do like to add is I like to add I've got a special platinum MACD that I use. I call it a platinum MACD. It's a very sensitive MACD. You can see there I've got my MACDs falling across. I entered here, that was an $80 move per contract, 2 contract. That was a nice little trade, 5 on the first, 8 on the second. Now up here later on, we then had a double top up here against the one of our EMAs, and that actually also was an $80 move. Now down here we've come down, we've bounced on a pivot, we've come up, we've bounced off the EMA, come down and bounced on the pivot, formed a T7. Now by the way, we call double tops and double bottoms T7s. We've got over 12 different strategies, so we give them code names. And by the way, if you remember watching this, just remember the rule: if you're new to the program, master 1 to 3 strategies as well before you move on to the next one. Very important. So you've got the double bottom here and the arrows here. This is a great move. Okay, so you'll find a lot of these moves, you know, you'll pick up 15, 20 ticks. Now on gold, that is of course $150 to $200 per contract. Now let's go and have a look at another market. Let's go and have a look at CL. So if we look at oil here, the black gold, we're looking at a 610 chart. Now once again, these appear on all markets and all time frames. So what I want to show you is this. Let me just scroll this over for you. So you can see here we had a double bottom. Okay, come down, went back up there. So you actually had an entry. You could have gone long here. You actually had divergence. Once again, I love divergence when I've got a double top or double bottom. Okay, so small moved and bounced off the EMA, and this is one of the things that you need to be aware of course, is that when you entered a double top or a double bottom, you've got to consider, where is my closest support or resistance? Where am I most likely to bounce? So our members know that you're very likely to get a bounce at your major EMAs, which is exactly what happened. You then had I ended up having an 89B right here. So you come down and you tested it again. Now here there's a 1 tick difference between this low and this low. Now this is really formed what we call a triple bottom, 1 2 3, but you know it's still exactly the same. We've tested it 3 times, it's been rejected, and off it goes. It really flies. So just be aware of that. When you have a triple bottom or a triple top, you can get some really great moves as you had there. Up the top here we can see, and we had a standard divergence trade here, then we had another great double top here, a T7, and away it went. Now on a standard trading chart, say if I'm trading a 144 tick or a 233 or a small range, etc., I'll allow up to 2 ticks higher on either side. So if this a particular top here was 2 ticks higher than this one, that's fine. The higher the time frame, the more lenient I am. So let's just say if I'm trading a daily chart and I had this was 5 ticks or 6 ticks higher, that would be fine. Okay, close enough is good enough. It's got exactly the same, but what I do want to see divergence, which is important to me. Now let's now go and have a look at chart at an NQ chart. So this is a 144 NQ chart, exactly the same thing. Now this, if you look down here, you've got very slight divergence. You can see it's starting to happen here. Now what makes this even better is that we've come down, we're bouncing on a major EMA, we're bouncing on a floor pivot, we've come down and tried the low twice. So there's my double bottom, and you know the ideal double bottoms is maybe when you have 7 or 8 candles in between, but once again this is fine because there are other things that are adding to it. If you notice our EMAs, our major EMAs are in an uptrend, so this is a double bottom with the trend, a very high probability trade. As most of our members know, we call it a bet the farm trade because they're just really great trades. Now once again, when I say that, I say it tongue-in-cheek. You always consider your money management rules. And up here we then had a great double top, and there's a lot of other things there that make this a great double top here, but one of them here is you've got divergence. And let's go and have a look maybe at the euro dollar. So this is the euro dollar 89 tick. So as day traders, of course, we trade lower time frames, so we can see up here we've got some divergence. You can see that there, and let me just bring my pointer back here. You can see I've got divergence. Now this is dropping away. Now I know it's not 2 humps or whatever like you've had from say there to there, but once again close enough is good enough because price has gone up, tested up again, and it's, I know we could argue, and some will argue that's a triple top, but you know what, close enough is good enough. It's gone up a number of times and it's trading with the trend. Okay, if I was to put my anchor chart up, you'd see it was screaming down. This is a great double top to trade, and of course we had an explosive move. When I say an explosive, we had a great move, let me put it this way. Down here we had another one. Okay, we had another double top down, and then you had a double bottom, and what happened with that one? Okay, it rallied up and you bounced on the EMAs. Now remembering, you always consider this. So where do you pull your stops in, or where do you take profits? One thing we teach our members is to be very aware of where is your most likely bounce point going to be. Here in this case, resistance being a major EMA. So you really want to be aware of that and either pull your stops right in and go to break even, or take your profits or a part profit. And that's really what we teach. Now here of course you've got to be aware of, if you're taking a trade with the trend, you're always going to watch this. So let me just draw this here for you. So you can't really see it here, but just here is you've got your closest swing low just over here. Okay, so you've got to be aware that you know you might get ready for a bounce. Likewise, you take, where's my I enter this trade, where's my closest swing low? It's here, and you actually bounced off that. Now what a lot of traders will do is I'll say, okay, let's take some of our profits off here. And what you can also do, and this is perhaps digressing a little, but when you go in these and you know you've got a major bounce point, sometimes you'll see the market will turn before you hit it. So you can front run these bounces by perhaps having a buy order in 1 or 2 ticks above this swing low, just to guarantee that you do get filled if it does bounce, at least take partial profits. So traders, that is a very quick run down on trading double tops and double bottoms. It's a very simple pattern to trade. Members, there's actually cheat sheets, there's extensive PowerPoints in the members area. We've got some great ebooks in there on trading chart patterns, along with the PowerPoints and the recordings. There's a ton of stuff there. If you're new to my channel, or if you want, come and join us. $197 traders, you get lifetime access. You get all of this, tons of great stuff like this. We've got over 1,400 members, and our target is 10,000 within the next 2 years. We're building a great community of day traders. There's no upsell, there's no coaching programs to buy. 197 is it. So we hope to see you as a member, and you're on my mailing list, so expect to receive another recording over the next couple of days with another setup. It'll probably be on descending and ascending triangles, another great strategy for day and swing trading. Thank you traders, see you on the next recording.